Welcome to Illuminati Silver. We tell the truth about silver. Today is Sunday the 17th of January 2021 and we're publishing the 7th episode in a new series of Bitcoin versus gold and silver, a series published every Sunday. Now we appreciate not everyone's interested in Bitcoin, but we argue it is a competitor to gold and silver, and so we seriously suggest you listen, if you can, to this series so that you can at least appreciate a competitor resource to our much cherished belief in precious metals. In today's episode, we look at the fact that Bitcoin fell almost $11,000 in one day last week, and we view what so-called professionals now claim about this relatively new currency or asset class. So let's take a look. Bitcoin versus gold and silver is indeed a fascinating subject, becoming increasingly more relevant as since we began this series, Bitcoin has jumped from one record high to another, and even this past week, despite falling some $11,000 at one point, we see Bitcoin standing today at $34,426, double the price from when our series began. Now we've listed episodes 1 to 6 in the description box below. A quick recap: in episode 1 we explained why we launched this series and why people found Bitcoin attractive. In episode 2 we confirmed the equity market is worth approximately $85 trillion, the tradable gold market $1.5 trillion, and the tradable silver market just $60 billion. Since the series began a little over 6 weeks ago, the market capitalization of Bitcoin was around $350 billion, and today that capitalization is not that far off, $700 billion. In episode 3, we highlighted a non-exhaustive list of the disadvantages of Bitcoin, which are similar to other cryptocurrencies. In 4, we highlighted the former White House communications director and founder and co-owner of hedge fund Skybridge Capital had launched a brand new Bitcoin fund and the reasons for doing so. In 5, we looked at the intrinsic value of gold and silver compared with the intrinsic value of Bitcoin. And in 6, we looked at a number of YouTube and Google influencers who have used Bitcoin's rise as both clickbait and arguing it as being an investment opportunity. And we've placed links to all 6 episodes below. Now, as mentioned earlier, last week we saw Bitcoin prices tumble to the point at which, at their high, they touched $41,113, only a few $100s from its all-time high, reached the week before, and at its lowest point, last Monday, actually touched $30,142, a fall of almost $11,000 in just one day. Now this is the fear of Bitcoin, as we've mentioned previously, that the volatility in its price does neither make it an ideal currency nor financial asset that one can depend upon. In other words, it's a high-risk, speculative form of investment. But what is interesting is to see what others actually think. Up until now, the general consensus has tended to be more positive Bitcoin than negative, with some analysts, including JP Morgan, predicting prices this year will exceed $100,000 or more. We shall now look at 2 brief articles published today. The first being positive about Bitcoin and its future, and the second positive in terms of price acceleration, but negative in terms of future viability. So let's take a look. Yahoo Finance: Bitcoin crash is excellent opportunity to buy the dip. Dated Friday, January the 15th. One of the major investing themes coming out of 2020 is the soaring price of Bitcoin. However, the cryptocurrency slid as much as 21% over a 2-day period to as low as $32,389. Since the start of the novel coronavirus pandemic, it's the biggest 2-day drop, wiping off nearly $140 billion in total market capitalization. In a nutshell, investors reacted to the stronger dollar and growing political uncertainty. The cryptocurrency is still up roughly 89% on a trailing 1-month basis. Nevertheless, the drop did send shivers down the spines of investors. Peaks and valleys will always be part and parcel of investing in Bitcoin, but I believe this is just a momentary blip, and normal service will resume soon enough. COVID-19 is surging once again in Asia, and the impeachment of President Donald Trump is jolting the markets. The strengthening of the dollar and higher bond yields are also an important contributing factor in the fall in Bitcoin prices. However, all these factors are temporary in nature. In the long run, Bitcoin will continue to climb higher. Financial institutions are increasingly allowing users to buy, store, and sell cryptocurrencies. That's why in a recent Bloomberg Crypto Monthly report, analysts are predicting that Bitcoin could more than double from its current value in 2021. The recent surge in Bitcoin prices is due to multiple factors: a weaker dollar, economic optimism, big-ticket investment banks backing the scarce digital currency against inflation, and a weakening US dollar are some reasons. However, I believe the biggest contributor is higher institutional interest. Express article dated Sunday, January 17th, 2021. Headline: Bitcoin Chaos. Wall Street icon Burton Malkiel explains how cryptocurrency could collapse. Bitcoin investors have been warned that the cryptocurrency could collapse by Wall Street icon Burton Malkiel. In recent weeks, Bitcoin values have shown volatility not seen since the cryptocurrency's 2017 crash. January has seen record highs before the worst decline since March 2020, with a 20% drop in just 2 days earlier this month. The dramatic fluctuations have worried investors, and warnings from legendary economist Burton Malkiel about the cryptocurrency's future appear increasingly relevant. Writing in the latest edition of his iconic book, A Random Walk Down Wall Street, Mr. Malkiel explains how upward spikes in prices have often accompanied periods of international tension. He claims holders of Bitcoin tokens often reside in countries with weak rules of law and tenuous property rights, while noting that the cryptocurrency could be looked on favourably in North Korea. Indeed, several economists have previously argued that the growth of Bitcoin has been called an index of money laundering. However, Mr. Malkiel appears to see the writing on the wall as he explains how legislation could burst the bubble. He writes, "Governments can be expected to crack down on the use of Bitcoin and other cryptocurrencies for illegal transactions. In 1933, US President Franklin D. Roosevelt made it illegal for Americans to hold gold. All governments have rightly been very particular about their sole right to issue and control currencies." Mr. Malkiel also explains how Bitcoin's reliance on energy usage could prove problematic, while presenting a window of opportunity for any government intent on clamping down on the cryptocurrency. He adds, "Governments can shut down the exchanges on which cryptocurrencies are traded. Since Bitcoin mining operations use considerable computer power and are energy intensive, restrictions can be imposed on the computers that run the public distributed ledger central to the transactions network. Creating a single token requires as much electricity as the typical American house consumes in 2 years. The total network of computers comprising the Bitcoin network consumes as much energy each year as some medium-sized countries. And if the market isn't targeted by national or international government legislation, Bitcoin could collapse if someone breaks the underlying encryption system." Mr. Malkiel concludes, "There would be no time to update the system's protocol so as to keep everyone's money safe." His forecasts are not time-sensitive, though, and Morgan Creek Digital co-founder Anthony Pompliano predicted that by the end of 2021, the cryptocurrency will hold a value of $100,000. Mr. Pompliano explained his prediction, made in August 2019, to CNN's Julia Chatterley. He said, quote, whenever we get to a recessive period or kind of slowing growth, central banks have kind of two tools. They can cut interest rates and they can print money, quantitative easing. And so when they do both of those things, it usually takes anywhere between 6 to 18 months to feel the effect of those tools. And what it's going to do is it's going to coincide with the Bitcoin halving. Bitcoin halving is when the cryptocurrency being mined by users is slashed in half every 10 minutes. Mr. Pompliano added that Bitcoin has some benefits over gold. He continued, the difference is between Bitcoin and gold. With Bitcoin, we know exactly how many are created. So 1,800 Bitcoin are going to be created today. The second thing is we know the total supply available, which is 21 million. So it's not, hey, I wonder how much is in the ground. We know exactly how much it is. And we can actually go and audit or verify the software code of the system. Just last week, Mr. Pompliano predicted that the cryptocurrency will one day reach a value of $1 million. He tweeted, Bitcoin is a 10 times improvement on gold. We will one day see a $1 million Bitcoin price, which is only 2 times the gold market cap. Everyone is underestimating Bitcoin's potential. However, Britain's Financial Conduct Authority warned if consumers invest, they should be prepared to lose all their money. Some investments advertising high returns from crypto assets may not be subject to regulation beyond anti-money laundering. Significant price volatility combined with the difficulties valuing Bitcoin reliably place consumers at a high risk of losses. So there we have it. Another consensus that Bitcoin's price could and is likely to continue to soar. But the sting in the tail could be its eventual sudden collapse. So let's hope for those who love Bitcoin that Peter Schiff and David Morgan predicts its imminent collapse, and then we will know it's likely to run for years and years. Sorry, could not resist that dig. What do you think? Do you agree that Bitcoin could indeed rise to $100,000 or even $1 million? Or do you feel it could be closed down well before then? Do let us know your thoughts. Meanwhile, thank you so much for listening. If you haven't already done so, please subscribe to our channel, not forgetting to press the bell sign so you're notified of our videos as and when they are published. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer. Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.